Hi everyone and welcome to the Panic Drop channel. Today I want to provide you with an update on the markets by examining some charts. However, before we dive into that, let's take a look at some fundamental events and analyze what investors are anticipating for the upcoming FOMC meeting. This week, there are several key events to keep an eye on in the markets. On Thursday, we have the release of the GDP and employment claim data, followed by the core PCE price index data on Friday. So these events can have a significant impact on the market and are crucial to understand the current economic landscape. Looking ahead, the next FOMC meeting is scheduled for March 3rd, where the possibility of a rate hike announcement will be on the table. As of now, market sentiment is split 50-50 between 25 base points and 50 base points rate hike. I will be closely monitoring these developments, so be sure to subscribe if you want to stay up to date with the latest market insights. So let's now look at some charts starting with the S&P 500, and this is the weekly chart. You can see that the price is still above the long-term trend line, which is still positive. Now I have zoomed in a bit and you can see that it's struggling to stay above some key moving averages. We have the 20 weekly moving average and the 50 weekly moving average. It's now right below the 20 weekly moving average. But just looking at the chart, we see the weekly uptrend remains intact because we have always a higher high, we have always a higher low, and bulls want to see continuation for the next higher high. Bears want to see a continued rejection by these moving averages and price coming down. And so far, this is how the week has started with a rejection. So for now, bears are back in control, and this looks like another lower weekly high with the possible rejection. The daily chart shows how bullish January was, here the clear uptrend, but since then it has been trading in this downtrend, this daily downtrend. You can see lower lows and lower highs. It is positive to see it's still trading above the 200 moving average, since that's usually a sign of bullish sentiment for investors. Now let's take a look at the Nasdaq, and this is the weekly chart. You can see the price is trading above the long-term trend line and also some important moving averages. You can see how the trend has shifted bullish from October with higher lows and higher highs. For now, it's still a confirmed weekly uptrend, and this chart looks more bullish compared to the S&P 500. The Nasdaq has a lot of room to make a new higher low, and then it's possible it can bounce to make a new higher high here. Looking at the dollar, it could still be forming a new lower low here, or it might still have a bounce at this level and continue higher. Looking at the daily chart for the dollar, it's still trading in this downward channel. It tested this upper trend line from the channel and is now looking to be heading down again. So for now, no change in trend for the dollar. And lastly, I want to look at the weekly chart from Bitcoin. The weekly uptrend is still intact. It started in November. You can see higher lows, higher highs. Now it also had a new higher high here. Bitcoin is still trading above the 250 and 20 weekly moving average. A correction near one of these moving averages could easily happen, and the price would remain in a weekly uptrend if this weekly low doesn't get breached. Now, my general expectation is still a sideways year since we are in an accumulation phase. So, a deep correction to the 20k level this year seems highly likely. So that's why I took some profits over here for the buys I did during the last correction. Now that's only 1% of my Bitcoin allocation. I still have 9% allocation, and if price goes up, that's fine for me. But if it were to break below the 27k level, I might sell another 2% allocation. But for now, the 27k level is holding, and there's nothing wrong with taking some chips off the table. Locking in some profits is fine. I'm happy with the gains I made, so now I could use that cash for a possible next correction. I'm also still not touching any altcoins because once Bitcoin has a deep correction, altcoins might get wrecked a lot, and I don't want to take that risk. That's it for today. Thanks for watching. I hope you found this content helpful. If you did, please don't forget to like and subscribe to stay tuned for more videos like this. Take care and have a great day. Bye bye.